Hello everyone, welcome to this e-learning video on ledgers. This is a continuation from journal entries. The format of the ledger accounts are as follows. As you can see, there are 5 columns in the ledger account. The additional portion that is not found in the journal is the balance column that is present in the ledger accounts. There are a few characteristics of the ledger account. First is the name of the account. This is the name of the ledger account that we are preparing, such as the cash at bank account, the trade payable account, rent expense account, and so forth. The ledger account is a grouping of all transactions involving it. You can see that this is a summary of all the transactions that have taken place with regards to this particular account. In the date column, you will see that the transactions are posted according to the dates in which they occur. Next, you will see a debit column. This is the column that you will place numbers into if you would like to debit this particular ledger account that you are preparing. You also have a credit column to indicate the amount that you would like to credit from the particular ledger account you are preparing. The ledger account also has a balance column which indicates the balances of that particular ledger account at a particular date. The fifth characteristic of the ledger account is the particular section, which will explain why we have debited or credited this ledger account. Let's learn how to prepare ledger accounts from journal entries. Before that, it is important for us to recap how to prepare journal entries. As you can see, to prepare journal entries, there were 4 steps that were being mentioned. We have used the debit and credit rule to record journal entries in our journal. In order to facilitate our memory on whether to debit or credit accounts, we refer to the Adelic table. Once we have prepared journal entry in the journal, we need to check that we have not violated any of the rules of recording. The 2 checks are: first, we need to make sure that there is one account that is debited, and we need to make sure that there is at least one account that is credited. The second check involves ensuring that the total debits is equal to the total credits for each transaction. Let's get started on how to prepare ledger accounts, and to do this, we will go through a worked example as labeled as Lorwin in your set of handout. Let's look at the first transaction in the worksheet. Lorwin contributed $3,000 into the business bank account. What are the journal entries for this transaction? Let's take 10 seconds to think through the journal entries. Did you get debit cash at bank account and credit capital account? Once you have the journal entries prepared, you will then be able to proceed on to prepare the ledger accounts. there are 4 steps involved in preparing the ledger account. We start from the journal entry. The first step is to post that account to the ledger. Step 2 is to post the associated debit or credit amount to the ledger. Step 3 is to post the reason as to why we have debited or credited the ledger account. Step 4, we will then compute running balances in the balance column. We need to check that the reason or the particulars column cannot contain the same as the ledger account that we are preparing. The second check is we need to ensure that only one amount is posted to either the debit or credit side. There will never be a case where 2 amounts or 2 separate amounts are placed in both the debit and credit columns. Let's apply the steps to the transaction that we have prepared earlier on. As you can see, this is the journal entry for the first transaction in your worksheet. A debit entry to cash at bank account and a credit entry to the capital account. From this journal entry, we will then post it to our ledger account. As you can see, the ledger account format is very similar to the journal entry format. The only difference is in the ledger account, there is an additional column also known as the balance column. Let's start to post from the journal to the ledger. Step 1, we will post the account that we are preparing to the ledger. Let's start with posting the cash at bank account. Step 2, we will then post the associated debit amount to the cash at bank to the ledger. Step 3, we would then post the other account in the particular section. Recall that we need to find or we need to state the reason why we have debited cash at bank account with $3,000. The reason in this case, or the other account affected in this case, is the capital account. Step 4, we will then compute the balance in the balance column with the nature of it. It is a debit balance in this example. After we have posted to the ledger account, we need to check. The first check is, note that in the particular section, it cannot contain the ledger account that we are preparing. So I will never see cash at bank account in the particulars column of the cash at bank account. Next, the next check is the amount that I've posted would be either in the debit side or the credit side. Since I have a debit entry to the cash at bank account, I would place $3,000 in the debit column of the cash at bank ledger account that I'm preparing. After I have posted the cash at bank account, I would now need to post the capital account. So we have technically only completed half of the posting process for the transaction. Let's post the capital account to the ledger. Step 1, we post the capital account to the ledger. Step 2, we will post the associated amount, credit in this case, to the ledger account. Step 3, we will post the other account affected in this transaction in the particulars column. The particulars column will explain why we have credited the capital account with $3,000. Step 4, we would then compute the running balance. In this example, we have $3,000 in the credit column only. So we would have a balance of $3,000, which is a credit balance. Once we have prepared the posting process, we would need to check that we have not violated the rules of posting to the ledger account. The first check is in the particulars column, we should not see the name of the ledger account we are preparing. So in the particulars column of the capital account, we will not expect to see any capital account being shown here. The second check is the amount that we have posted would only apply on either the debit or credit side. From the journal entry, we have credited capital $3,000. So we would need to post the $3,000 on the credit side of the capital ledger account that we are preparing. We have now posted all the accounts to the respective ledgers for the first transaction. Moving on to the next transaction in the worksheet. The business purchased $2,000 of camping supplies, which is the business's goods, from a creditor, Joseph Limited. The business paid 20% by check, and the rest, which is 80%, which is going to be on credit. Let's take 10 seconds to come up with the journal entries for this transaction. Did you get these journal entries? You may also split up inventory into two parts. Instead of combining the 400 and 1600, you can also present the journal entries as follows. You can present it as debit inventory 400, credit cash at bank 400 as the first set. For the second set, you can debit inventory $1,600 and credit trade payables Joseph Limited $1,600. By putting it in two different sets, it would be easier for you to do posting later on. If you decide to prepare the journal entries in this manner, which is the combined manner, you may face some difficulty when you are posting these entries into the ledger account later on. As you can see, these were the journal entries for the second set of transactions in the Lorwin worksheet. Since there are 3 accounts here, we would need to post 3 times to the ledger account, one for each of these ledger accounts. We will continue to post from the cash at bank ledger account that we have prepared previously. Let's start to post the cash at bank account to the ledger. If you recall from the steps, the first step is to post the account to the ledger. Step 2 is to post the associated amount to the respective sides, either debit side or credit side. In this example, we have a credit entry to the cash at bank account, so we will put the $400 on the credit side. That is step 2. Step 3, we will post the other account affected in this transaction in the particulars column. This is the reason as to why we have credited the cash at bank account with $400. The account that we need to post to the particulars section, or the reason, is to do with inventory. If you are thinking between inventory and trade payables account, you would notice that since we have credited the cash at bank account, in the particulars column, it has to be an account that we are debiting, because for each transaction there can be at most or at least one account that we debit and another account that we credit. If we put Trade Payables Joseph Limited here, what it means is we have credited both of those accounts, and we would have already violated the rule of recording. Step 4 is to compute the running balance. If we have a balance of $3,000 debit previously, and we are now crediting $400, we would now have lesser debit balance in the account. We are done with posting the cash at bank account. Let's do our check. The first check is in the particulars column. I would not expect to see the cash at bank account. Next, for the second check, the amount to be posted is placed in only one side, either the debit or the credit side. In this example, it is on the credit side. Once I have checked the posting to the cash at bank account, we will proceed to post the other account in the journal. We would now post the trade payables account to the ledger. So let's go through the 4 steps again. Step 1, we would post this account to the ledger. Since we have not prepared the trade payables account before, we will open up a fresh set of ledger for trade payables, Joseph Limited. Step 2, we will post the associated debit or credit amount on the respective side of the ledger account. Step 3, we would then post the other account affected in this transaction. We are posting the reason as to why we have credited the trade payable account with $1,600. So why did we credit trade payables $1,600? The reason will be placed in the particulars column. As you can see, the reason why we have credited trade payables account is because the business has bought goods on credit. In fact, 80% of the goods were bought on credit. So we will put inventory in the particulars column. Again, if you are considering between inventory or cash at bank, let's consider the journal entry rules of recording. We have credited trade payables account with $1,600. If we have credited the trade payables account, the other account that's affected has to be an account that we are going to debit. Step 4 is to compute the running balance. We are done with posting the trade payables ledger account. Let's do our check. The first check is in the particulars column. I should not expect to see the name of the ledger account that is being prepared. So in the particulars column, I should not see trade payables Joseph Limited account. The second check is the amount should only be placed in either the debit side or the credit side. In this example, since we have credited the trade payables account, we will place the amount in the credit side. After these two checks, we are done with the posting to the trade payables account, and we will then proceed on to post the cash at bank to the ledger. Let's post the inventory account to the ledger. Step 1. We post the inventory account to the ledger. Since we have not prepared this ledger account before, we are going to open it up and start from fresh. Step 2. We would then post the associated amount on either the debit or credit side. Since we are debiting the inventory account by $2,000, we would then post the amount to the debit side. The reason why we are not posting $2,000 as a lump sum is because when we are going to do step 3, which is the reason as to why we are debiting the inventory account by $2,000, is twofold. The first part has got to do with the inventory being bought and paid by check. That is the $400. The other reason as to why the inventory account has increased is due to 80% of it, which is bought on credit. So $1,600 is due to the owing to trade payables Joseph Limited account. Step 4. We will then compute the running balance. Once we are done with the posting process, let's do our check. The first check, in the particulars section or in the particulars column, I should not expect to see the ledger account that we are preparing. First check is satisfied. Second check, the amount to be posted will only be posted to either the debit side or the credit side, and not both at once, right? So we are debiting the inventory account, the amounts are placed in the right column. We have successfully completed posting all the 3 accounts in this transaction. After posting all the accounts to the ledger, this is a summary of one particular account that you may have, the cash at bank account. From here, you can see that it is a summary of all the transactions that has happened in February. We have debited the cash at bank account with $3,000, $5,000, and $375. Why did we debit the cash at bank account with these amounts? Let's look at the particulars to find out more. If we look at the capital account here, we would know that it has something to do with owner's contribution. If we look at the bank loan in the particular section, we would know that the cash at bank account is debited by $5,000, and the reason is due to bank loan. So what it means is the business has taken a bank loan. If we see that the cash at bank account is debited by $375, and we want to know why did we debit the cash at bank account with $375, we look at the particular section for the reason. We can see that there is trade receivables campfire account here. What it means is the business has actually sold some goods on credit, and when the cash at bank account is debited, the cash at bank account has increased. So when the cash at bank account has increased and you see a credit customer name here, it means that the customer has paid the business $375 by check. Therefore, the cash at bank account is debited, or the cash at bank account is increased by $375. Similarly, we can have a look at why did the cash at bank account decrease. We know that the cash at bank account has decreased because we have credited the cash at bank account with these amounts: $400, $300, $1,000, and $2,700. The reasons for the decrease in the cash at bank account during February can be found out when we refer to the particulars section of the cash at bank account. Finally, we can see that the balance in the cash at bank account is $3,975 on February 28. So as a recap, the ledger account provides a summary of all the transactions related to it. In this example, we can see all the transactions involving the cash at bank account in the month of February at a snapshot. That is the end to the first method of recording ledger accounts, which is we need to prepare the journal entries first, followed by posting the respective accounts to the ledger. Please proceed to complete the worksheet. You may check your answers provided as well. Also review this video again if you have difficulty with certain parts of it. Happy learning!